Thank you, Mr. Chairman. First of all, let me say thank you for your testimony. I think that probably for people who are watching this, it's an eye-opener as far as how important the refining process is in all of this. I think Americans have a tendency to think about this as the price of a barrel of oil, and they ignore the different kinds of oil that's out there, but more importantly, they ignore the fact that once a barrel of oil is produced, there is a complex process by which it is turned into something they can put in their automobile and actually use, and transporting it to the place where it can be used. So your testimony in that regard is very welcome, I think, as far as helping clear up this picture. Again, though, it underscores the fact that the law of supply and demand is indeed a law. Here in this town, with the politicians, we find that a lot of people believe that the law of supply and demand is merely a suggestion. And unfortunately, we have to overcome that from time to time. As you know, we're debating a bill on the floor right now, and I guess I come at it from 180 from where Senator Franken comes at it. He talks about these awful loopholes and subsidies. Language is an amazing thing in this town. When those were put into place, they were called incentives in order to get the companies to produce more oil and gas so that we could have so that the law of supply and demand would work in favor of the consumer. Now they're labeled as loopholes and subsidies as opposed to incentives. So I appreciate your helping to clear that up. And I guess I come from this from a relatively simple standpoint. I don't know how anyone who has even the slightest understanding of economics can believe that by increasing the cost, namely the taxes, that you will somehow lower the price to the consumer. I mean, that absolutely boggles my mind. Now, you can go into a long theoretical discussion about, oh, in the long run, it will bring in alternative fuels, et cetera, et cetera. But my constituents are looking for a price reduction today, and you can't reduce the price by increasing the cost. Finally, let me say one thing. Appreciate your thoughts on the speculators. Again, you need market makers. I think everyone would agree that you need market makers. Am I right or am I wrong on that? I mean, if you're just going to buy from the producer, there's always room for manipulation in that regard. But if you got market makers, you get a free market that is very, very difficult to eliminate. The problem I have with what Senator Franken talks about, and that is limiting the speculators. How in the world, maybe you guys can answer this, how in the world, if we absolutely prohibited speculation in America, put a 25-year sentence mandatory on anybody who engaged in speculation in the price, how would you stop that from happening in another country? After all, we make up only 330 million people on the planet that's got 7 billion. It seems to me they'd open up tomorrow in London or in Singapore or somewhere else and do the exact same thing that they're doing here. Am I right or am I wrong on that? Dr. Yergin?
Well, I think Paul should answer some of that, but I think that definitely, you know, we're part of a world oil market. We're not the world oil market. We're the North U.S. Oil market. And, you know, if you look at the annual reports of Southwest Airlines, it's clear that without the ability for them to hedge their price risk, they would not have been able to stay in business, is what their message is. To hedge, you need somebody on the other side of that and that's what future markets do. So if we didn't have these kind of markets in a situation we'd be looking at today, airlines would be taking their planes out of the skies and be parking them in the deserts because they were not able to hedge their financial risk. And that's what those markets do. Obviously, the markets have to be regulated. They have to be understood very closely. But that's when you have a big traded commodity, people need to manage their risk in order to stay in business.
Thank you, thank you, Dr. Yergin. Dr. Horsnell, you seem to be modestly familiar with Great Britain. Could we pass a law here in Washington, D.C. that would regulate the speculators in London?
I think I'd bring in one further country into this, which is actually Switzerland. In what we've noticed, I cover more the physical oil markets, but the trend we've noticed, particularly over the last couple of years, has been a very large movement of oil trading out of London and into Switzerland. Some of the most important traders now are not banks, they are Swiss-based traders. And that may be, again, part of the process you were talking about. It's much harder to get full visibility on an oil market where the balance has shifted away from more regulated centres, shall we say, and into other areas. And I think there are various shifts going on, and part of it is from banks into traders, from New York and London into Switzerland. And that might be an interesting development as the years go by in this particular area.
My time's up.
Senator, can I add just one point on you talked about the tax incentives, and I think that's absolutely right. I think time changes, and I actually think the debate would be markedly different if there was a discussion of corporate tax rates overall, right? That we wouldn't be in this position of subsidies and tax incentives.
Oh, I think you would.
There'd be a balancing of the...
Here, they'll call anything that has to do with a corporation a loophole or a subsidy. So I'd like to share your optimism, but I don't. Thank you, Mr. Chairman.